Today we're going to talk about the housing crash and what it means to you. I'm Jim with the Bishop team, bringing you all the real estate information you need to know here in Orange County, California. So our first slide talks about supply. Basically, the number of houses for sale has been going down, as you see on the chart. If you look at today versus 2019, we're down 68% fewer homes for sale. We're down 40% from this time last year. In this next slide, we see the number of homes for sale as a trend throughout the year. You can see in 2019 and 2022, we peaked in August, as we did this year. And then the number of homes for sale tapers off towards the end of the year. So while the trends the last couple of months have been fairly normal, we are at a lower level than we were in 2019 and last year in 2022. One of the main reasons for the lower number of homes for sale is shown on this new listing slide. This is the number of homes that come on the market new each month. So you can see in the blue line in 2019, the number of homes coming on the market increased at the beginning of the year, peaking in May, and then tapered off towards the end of the year. Note that that is a much higher level than even 2022, where we peaked a little bit early in April, and then with the interest rates blowing up, that number tapered off a little bit sooner than normal. And then this year, the number of homes coming on the market on the red line peaked in June, but at a much lower level. So bottom line is homes coming on the market has been what's called a constrained supply, or a limited supply of homes, which has affected other parts of the market, supply and demand. So on the interest rate slide, this has been another factor that's not only affected demand, but also supply. More on that in a second. You can see we peaked at 8% interest rates. If you're young, you've probably never heard of that. And if you're older, then you haven't heard of that in a long, long time, like over 20 years. But as you can see, just this week, rates dropped pretty quickly. Fed met, they had one of their 8 annual announcements, and they basically didn't adjust rates up or down. And the bond market had a lot to do with this, but rates at the mortgage level dropped about 0.5%, from 8 to 7.5%, very quickly. So as we're slowing down in the season of the year, it'll be interesting to watch and see if that spurs buyers to pull the trigger while rates dropped, the fear that they could go back up and make the home they want to buy more expensive. So in this next slide, we're looking at the number of new listings year to date that have come on the market. In 2019, by this time, you'd seen almost 13,000 homes come on the market, whereas this year, you've got just under 6,700, which is about a 49% reduction, so about half. In addition, down almost a third from last year, down 31%. So all of this is constraining supply, and the effect of that we'll get into in a second, but it's affecting both price and the quantity of sales, which is having other effects on the market. So if we look at this next slide of escrows, so that's immediate demand, buyers that are writing the check, getting into escrow. The blue line is 2019, and you can see just like inventory grows, demand grows at the beginning of the year. Demand in 2019 also peaked in May, tapers off towards the end of the year. The green line, 2022, demand peaked in April, again affected by that sharp increase in interest rates going from 3.25% to over 7% in a very short period of time. So that was a little bit of an outlier. And then the red line, albeit lower, we also did see a little bit more normal seasonality in that the peak of escrows was in May and then it's tapered off. So we do expect that number to taper off a little bit more in November and December as those final months come in. But we also know that inventory is going down as well. So here's the crash that we talked about. It's in the number of homes that have actually closed escrow. Again, 2019, your blue line, demand goes up beginning of the year, peaks in the late spring, tapers off towards the end of the year. A little bit shifted on your green line, which was last year due to interest rates. Again, tapers off towards the end of the year. And then this year, your red line took a pause in the spring and then kicked back up, and then has been slowing down a little bit as we get into the holiday season. One thing to note in the escrow information is that red line is actually higher now in 2023 than we were last year in 2022. So that means there's more homes in escrow now than last year. So our demand is a little bit higher, even though the inventory is lower. So from a market standpoint, that is a stronger market. So again, on the crash theme, here's sales year to date over the last several years. 2023 year to date is down 32% compared to 2019, down 48% compared to 2021. And that was everybody was coming out of COVID and buying, and we had a tremendous demand. But we're also down 23% compared to last year. With escrows 2023 being above 2022, we do expect that gap to close a little bit. And so the differential between this year and last year will actually shrink a little bit as we get towards the end of the year, but not a lot. So I wanted to show you something, another tool that we use to look at the number of homes for sale compared to demand. It's called the months of supply. So if you have 100 homes for sale, that's a 10-month supply. Have 100 homes for sale and you sell 100 a month, it's a 1-month supply. So same number of homes, completely different markets. In this, you'll see that last year we started off extremely low supply. As interest rates went up, the months of supply went up because demand went down. In fact, November, we peaked at almost a 3-month supply of inventory, which is kind of normal, but we haven't seen that in a while. And then on your red line, as we got into building demand at the beginning of the year, you can see that months of supply went down and down and down, bottom out pretty much through July, and then started building a little bit, but at 1.5 months supply is still a really low number. Not 3 months last year. We've been running about 1.5 months supply in the last 4 months, which is a really low number. So that leads us into pricing, which I'll get into next. So now we're gonna look at pricing in Orange County. Are prices up? Are they down? The answer is yes. So if we look from October of 2022, we're up 6%. If we look at the peak this summer, we're down 2%. And if we look from the peak from last year, we're down about 1%. So are we off the peak? Yes. Are we above this time last year? Yes. So are prices up or down? The answer is both. So let's look at a couple local cities here in South Orange County. Laguna Niguel is up 9% year over year, meaning on October 2022 to October 2023, up 9%. It is down about 1.5% from the peak. The next city on our chart is Irvine. Irvine is up 11% year over year, down to about 1.7% from the peak. Ladera Ranch is up about 7% year over year and down about 1.8% from the peak. So very similar price trends. Irvine is obviously more expensive than Ladera Ranch, and each city varies, but the trends have been fairly similar across these South Orange County cities. So what does all this mean? Interest rates, as you remember, drove down demand. Supply went down faster, and that's why we had on net appreciation over this time last year. Normally this time of year you do have a little bit of cooling off on the appreciation, hence the pullback of 1 or 2%. From the peak, but that's not the precursor to a slide in prices, a lot more than that. And that comes back to the supply and demand. Demand is falling, but supply is falling just as fast, maintaining pricing. So we looked for the prices to be fairly flat through the end of the year. We are seeing record prices, and we are seeing prices pull back a little bit. And remember, your list price, just because someone drops a list price doesn't mean the value of the home went down. They might have overpriced it. We are seeing multiple offers in this market, even above $2 million. There's a home near here that they had over 20 offers on a $2.4 million house. So a lot of demand. If you have had any thoughts of buying or selling, give us a call. That's what we're here for. If you just want to know where does your value land in this market, no plans to move, absolutely feel free to reach out. Whether you're buying, selling, or staying put, we're here to help you with all your housing needs. So tune in next month to see what happens as we get further into the holiday season in this crazy year. And in the meantime, subscribe so you get notified of any new videos. And also shoot us a message if you'd like to sign up for our monthly newsletter, where you can get inside information that isn't here, and it's exclusive to members of our VIP list. And finally, if I don't talk to you before Thanksgiving, have a great holiday, and we'll see you next month. I'm Jim with the Bishop team, your leading realtors here in Orange County, California.